This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, welcome back. This is Joe Rabil. We're going to give you a stock market update for Friday morning. Now, one of the things I wanted to mention is that a lot of times you do this review and we're in a situation in the market where it's kind of repetitive. I'm coming back, I'm sort of saying the same things over and over again each week. And then what ends up happening is we get this shift. And again, I've been doing this for almost 35 years. I can tell you that you don't see the shift unless you go through the process of doing it weekly and just continually do your work, do good analysis, and then all of a sudden it just punches you in the face. Okay, we've got a shift taking place. So you got to be ready. You got to continue to do the same things week in and week out, and then all of a sudden you see the shifts take place. So let's keep doing what we've been doing, and I think we'll be ready once this thing is ready to turn. To learn more about multiple time frame analysis and using MACD and ADX in multiple time frames, I would suggest starting with the book, which I am still offering at a discount, at least right now. You can go to rabilstockresearch.com/book for more information. So the obvious question after yesterday's action is today the turn? Or, are we turning right now? And I think we've got a few key elements that I think we've got to pay close attention to over the next 24 to 48 hours because it looks like we actually have the potential to turn down this daily trend for the first time in a long time. So let's first go through some of these market conditions, because one of the things that happened this week is the sentiment popped up to a high. It's like a 3-year high. Has not been this high since I think the last high was at 47%, where there were 47% more bulls than bears back in 2021 in the summer. And so this has been a long time. It just keeps popping up. We've got a number of bulls out there. And so that definitely qualifies as a big negative in terms of how you'd weight it in the market conditions. Now, I do show the OBOS. Let me move this here, has dropped down to 58, but it's a divergence, a prolonged divergence on the weekly. So I'm leaving it as a negative for now at this point. All right. Now I'm going to go through the volatility, but there's a big pop based on the size of the bar yesterday. We're going to keep this at neutral, and I'm going to show you what's kind of going on there. Now, this hasn't shifted yet, but you can see that it's kind of up against its moving average. So if we get if this bar, which is a big bar, if we get another big bar like this, there's a very good chance we're going to start to see this pop. And then, last week I probably should have showed a little deterioration in the daily momentum. All right. It should have at least been neutral. I'm not sure why I wasn't thinking about that, but this is definitely now I would put in the negative camp based on how strong the divergence is. And I'll go through that. And then we'll go through the trends. All right. Let's just take a close look at what happened with the daily ATR. So we had this rotate over. It rotated over. But what I've been saying is that we kind of wanted to see this pull back into oversold. And the problem is to get it oversold, we had to break the 18. So it wasn't really a good situation. I mean, if you look at this action here, it's just been really lots of gaps, a lot of volatility, and you got to fill in the gaps to figure out the average true range. All right. So the bars did get smaller in here and it caused this to drop and get it to roll over. But look at what one single big bar did, all the way back up. And if this turns back to the upside, we'll be back to the negative and higher risk. All right. And then, as I mentioned here, this would not take very much. So this is the biggest bar we've seen. So we have to keep an eye on this. We still have Friday. So there is a jobs report coming. I mean, it's very possible the jobs report will cause this to rally back up and it won't break down. It's also possible that, we don't hear what we want to hear, or the Fed doesn't hear what they want to hear, and it causes the market to drop down even more. So Friday is very important to today's action. We're going to have to watch this really closely. All right. By the way, if you're enjoying the content, hit that like button and also subscribe. Continuing to try and grow this channel. Let's switch over to the 4 time frames, because so when I talk about getting punched in the face, I mean, think about this. if I look at it on these two time frames, I don't really see much of a change. There's not, at least not right now. Now, I am seeing red for the first time, and it is Friday. Now, it's a very good chance that these are going to stay red. Now, this is very early in the month, but this is late in the week. So, it's nothing but green here, right? If we can get a decent sized red bar here, you got to start thinking that maybe we're going to finally pull back. Maybe this MACD will break through its signal line since it's stretched away. And maybe this little divergence in the green DI will finally kind of cause this to pull back. So it's not really what I would call punching me in the face. But if I go and start looking at the smaller time frames, it is so blatant when you pull up a chart. This is the largest red bar we have seen, no doubt about it, for the year. Absolutely. It's bigger than any green or red bar that we've seen since the low. It's just a monster, right? And so I did a video on green monster bars for Stock Talk last week, 2 weeks ago. But, you can see them on the negative side, especially as we've shown that, I don't know that I'd call this divergence as much as kind of been an irregular uptrend with the MACD just kind of waving back and forth. It's really not been telling us a whole lot, but I will say this is a pretty strong signal. We've had divergent peak, and now we failed to stay above 25 as this was pushing to new highs here right at the end of March. And now we're clearly below 25. Got pretty good volume. See the distribution, see the red bars, see how the red bars are poking out above. And what I've said is, and this is an old IBD. If you read William O'Neill's book, his first book, it's we want to count these. We want to start looking to see distribution bars, right? And that's 4 distribution bars over the course of about 2 to 3 weeks. So that's a concern. I think even you could add this one in. That's 5 of them. So, and then I like to look for the monster red bar in this case. We've got the biggest red bar that we've had, and it's slicing through the 18. Now, the 18 is flat. It hasn't rolled over. And we don't have confirmation of a break of the 18 unless we take out the low of this bar. So I'm doing this prior to the release of the jobs report. I don't know how it's going to react yet, but if there's follow through to the downside, I would view that as a big negative. Now, if it gaps down, let's say we gap down like this, we could get some kind of a rally back as this is rolling over, and that might turn like that. We might get a little gap and then snap up and then roll over, right? But these are weighing on this, and I think this is really what's bothering me. And if you go to the QQQ, it's even more blatant. All right. But let's look at what's going on with the hourly chart, because you just come in, you do your work, you look, you're looking for signs, and you're kind of squinting here. You're trying to say, is this a reversal? Are these reversals? Is this a reversal? To me, this is so blatant. Look at the volume. This is easily the biggest red volume you've seen. Look at this big red pop here. Now, I haven't even been looking at the hourly bar. I haven't even mentioned the hourly bar for this review for probably a month or two. Maybe just in reference a few times. But I'm going to look at this when I see something this blatant, and you have to respect it. Now, we do know what we need. What we need is this to form and hold on a pulpit. So red's got to hold as this rallies up. At some point, we're going to rally up. It might have follow through first. It might, have a gap up right now off of the jobs report. Either way, it could play out. But what we've got to watch and see is red hold 25, hold above green through a rally. And if it does that and forms a higher low, well, this is forming a lower high, preferably, below these 2 lines. Then we got to start thinking that these big monster red bars on heavy volume are going to have some validity, and they're going to have some force to the downside. And we're finally going to roll through this 18-day moving average and get it to roll over. And that means we're going to correct back down to the to the 18-week. Now, I want to point something out, and I've been saying this for several weeks now, is that I don't want you to think too bearishly here. I know this is a negative, all right, but keep something in mind. I want to show you what happened back here. So this was happening on a weekly chart. Let's look at the weekly back in 2021. So that was the start of a bear market. We're moving up, we're moving up, we're moving up, and look at what happened. Strong ADX, lower ADX, and then we failed to get above, and through the end of the year, this continued to drop off significantly. And if anyone, some of the guys have been watching this since then, you know that I was getting a little concerned about what was taking place, especially when the volatility started to grow here. We started to see a pop in the volatility right through this period here. So just to end the year, we had a massive divergence, ADX divergence below 25, and we had increasing volatility. That was on a weekly chart, not a daily, all right, a weekly. That's where I'd start to get highly concerned. That's not what's taking place right now. This is happening on a daily chart. So am I concerned about the short term? Absolutely. So am I telling my subscribers to be very careful about new entries unless you're looking at energy or something like gold or something like that? Yeah, I'm definitely saying be a lot more selective about those right now based on the current conditions. But that doesn't mean that this is a big problem because the conditions on the weekly are very good. There's low volatility. The momentum is strong. We haven't seen a real problem. The only real negative is that we've been a little overbought. We're looking for some kind of a pullback to get a little bit more of an optimum entry. And you can see we'd love to fill in some of this, maybe come back and correct to the breakout point. Now, that's a healthy pullback, all right? But it doesn't change anything on the trend. So that's the one point I wanted to get across and make sure you understand that right now we're playing for a reversal on the day, or thinking or being aware of, not necessarily playing for one, but you could, if you got a rally here, this is a great time to put a hedge on, or a great time to think about, if you wanted to play the spider on the short side. I think this is the time I think to do it, as long as it's not a vertical rally and we get this to drop right back down. If we get some kind of a lower high here and a higher low in red, I would say it's a pretty good spot to, at a minimum, put a hedge on, and at a maximum, maybe actually put a trade on to make some money back down to next trend support. All right, so that's the way I'd be thinking. But other than that, don't get too bearish at this point. If we're going to top out, it's probably going to take a little bit more time. I'm talking about a bigger picture top out. All right. And we still haven't broken this trend yet unless we take out the low of this bar. Let's keep an eye on the slope of this moving average because there's so much volatility. We got to make sure that rolls over. All right, everybody have a good weekend, and we'll see you next time.